So today's insights are coming from Strike. You saw I wrote about a couple of sector indices, and all I was doing was scanning through the indices on the RMI scanner, looking for where the new buy signals are. And in fact, there were not many on the daily. So then I actually went to the hourly. And then based on what was coming on the hourly, I was looking at the combination. So that is where I got FMCG and realty from. So these are different ways of looking at it. Like you see here, FMCG is a new buy on daily. Already a buy on hourly, and there were new buys on the hourly which are now missing because probably that was a couple of hours ago, right? That was in the morning, what was coming at that point of time. Right now I see it only on consumer durable, but while I see an hourly buy on consumer durable, what I see is a daily sell. So I'm just clicking on the daily chart to see, okay, is the setup good? So here when I look at the consumer durable index, here it held the bands, rallied higher, here it is at the lower band. So in terms of setup, it is good, but while you have an hourly buy signal, you don't have a daily. So basically, and here you will be closing positive after this red bar on Friday. So that's what we explain in position sizing, right? One thing at a time. RMI may not have confirmed, but does it close positive? Are you close to the lower band? Then the risk reward is good, unless this breaks, right? So, and then if you do get back above the 20-day and so on and so forth. So additional confirmations can keep coming. But so far it is holding this range. It's not breaking it down, which is a good thing. So that's how you move your concentration from one to the other. Now, if you actually want to know which are the stocks in Nifty Consumer Durable, you can simply go to the heat map, pick on that particular index, and the entire list will show up here. Well, that's so much for getting into Strike. Now, coming back to our indices, and we go to the Nifty and we go to the hourly. Interesting things happening. You might just be getting, so on two different charts here, this is already in buy mode here. On my trade tiger, it's showing that it might just come at the end of the hour, which is at within a minute. I think at 1 o'clock, it will also confirm that the hourly RMI is crossing to the buy side. So that's good. The next thing is, are we crossing this previous top? This top was 19,675. We are at 74.55. Just a point left. Once we cross that high intraday, we are sort of sticking with what I said, 1, 2 and starting 3. Once we start 3 can actually be an elongated move. Just like you see here, 1, 2 and then 3 takes most of the stretch. And so that's the best part of the move that you don't really want to miss, which is wave 3. So I can actually put that marking here, since I haven't done it already, that this is minor wave 1 and this is minor wave 2, where we didn't retrace 61 but more than 50% on the here you can say almost 61, but yeah, that's what you ended up doing. So you can get rid of this. The next thing will be looking for wave 3 extension. So you can actually use the Fibonacci extension tool, do a 1, 2, okay, and then see where does 3 go, because equality will just get us to 19,832, but third wave, if I'm saying it's extended, then 1.618 times will get us to 20,053. So these are the two numbers for wave 3. Once you surpass the previous high of 75, that is what is that, 19,675, and once we do that, then we're looking for 19,832 and 20,053. Now, can we do something similar for Bank Nifty? The answer is no, because we made a lower low, so we don't have a 1 and a 2. We're just starting the first wave up. So Bank Nifty is definitely lagging behind in that sense. But also in terms of Dow theory, I mentioned yesterday, you want this previous high to be surpassed, which is at 44,500. So that would be a Dow theory reversal, because so far you've got lower lows and lower highs going on. Once you get past this, you'll have reversed the Dow trend. At least that will be the first signal of reversal. The daily RMI again will take time both on Nifty and Bank Nifty. So it's not going to happen immediately, and the next first resistance here is going to be the 20-day average at 44,892. So here we cannot make those kind of projections of wave 3 because we don't have 1 and 2, and so we'll just go by the next resistance, the 40-day, the 20-day, and take it from there as it develops. At some point Bank Nifty will develop its first and second wave, and that's when we'll take a clue from there. Now, of course, at some point of time, some reason comes up that Bank Nifty should test this lower line. I can't say, because it has been an underperformer. But once it goes above 44,500, I would not expect that. I would hope that the worst is done and we are getting past this congestion zone. We can even draw a trend line of these highs. We're sort of trying to get past this. So let's see. Now, in mid and small cap indices, again doing better, more than 1% up. Yesterday, remember I discussed this triangular structure in wave Y. So we are trying to break out of it for the mid cap index, W, X and Y triangle. So if we break out of it, would be a good sign. Will it result in a daily signal again? See, daily signals can take time. So I'm not really expecting that to happen. Okay. But this is the initial sign that yes, we didn't break the 40-day average. And we attempt to go back above the 20-day average, which is at 40,396 for the mid cap index. The small cap index is already above the 20-day because it didn't fall much. Yesterday I discussed these three bottoms in a line, so it can be WX, YX and then Z triangle. If that is true, we still need to break out of this congestion zone. Okay, so that may take a while because it's not close to the breakout point. The trend line of the last two highs could be at the breakout point. That's 12,733. So where are the major gainers? Well, it is the realty index. So hourly signals can work, right? So in the morning, this hourly buy signal was showing up on the hourly RMI scan. And that's why I wrote about it first. So just highlighting. So when you're looking for things, what is moving first? The moment you think market is bullish, I always look for where are the first signals coming. And that's sort of how you get the momentum. Those first signals could be either on the Dow theory or on the RMI scan itself. Now that doesn't mean signal aaya to hoega. Also look at the setup, right? I discussed that the setup itself was showing that prices on the decline did not break the lower band, took support on the 40-day above the 20-day. So that's why it was relevant and we sort of surpassed this previous high, I think, in the morning itself. Now the second major gainer is PSU banks. Now PSU banks have still not completed their cycle. So that is where my doubt will remain, though we can say this correction is ABC on the daily chart. The RMI is here. So it can waste time for all you know, form a triangle if it doesn't want to go lower. Or it can do a Z down and then complete the correction. So I wouldn't jump the gun on the PSU banks. Let them be. Let them complete what they have to. But there are many other places of interest, right? The media index is at the 40-day trying to build up for the next move. And you might find that even in the PSU index itself is better because it has touched the lower band here. The RMI is almost at 0. And so that makes a better case for a resumption of the rally when it comes to the PSU stocks. So actually when you see across line, when we're looking at these indices, you notice many of them have actually not broken down below their daily bands. And that's a very strong sign of a trending market. That it's not happening and this move is just going to continue. So even though Nifty or Bank Nifty may be showing weakness, so many sector indices are saying not us. We are not part of that weakness, and that is where the strength is coming from. So that's my conclusion. Where are we weak? We are not seeing much of a move in pharma. That's one area where Jay has had some concern, though broadly our count is 1, 2, 3, 4. We are just not getting the momentum for the fifth to really start. And FMCG I wrote about in the morning because the RMI was crossing over. Okay, now we're getting close to even crossing the 20-day and the weekly is at 0. So it's a good setup for something to start, but we are still not seeing momentum. Now if it gives a buy signal, ideally if it also closes above the 20-day average, could be a good sign that we are going to break out. But the real breakout is if you get past these highs, right? Get out of this range above the 52,500 point. That would be a sign that yes, we've started the next move. Now, if we just scan a couple of global markets, I have not written on about them this morning. The DAX did not break the lower end of the channel, is actually moving higher today. So these are interesting things when you see, okay, this worked, and something else worked. The FTSE was more difficult, but it didn't break this low. Okay, so it's still a 1, 2, 1, 2, very deep 2 and starting 3 of 3. Not what you would usually expect or want to see. But because there was a triangle and we were looking for a breakout, I was really on the hooks that if this low broke, then I can't do 1, 2, 1, 2 anymore. And frankly, it held by just a few points. So tricky stuff, going on. And the CAC did fall slightly below the channel line, but is back above it now. And the RMI may trigger a buy signal today. So this is how Europe is poised. The US, of course, came back above the lower channel line. The RMI is in buy mode. Now we're just hitting the 20 DMA. So we'll watch today whether the 20 DMA gets crossed, which is at 4349. Okay, so that's the global backdrop. In terms of our fear index, the dollar index, throughout this rise has stayed above the 20-day average. So even though it closed down for the week, I think the additional confirmation I want is a break below the 20-day average. That's what I'll be watching out for, whether it happens today or tomorrow. Because weekly negative close, fine, we try to say, okay, maybe the wave is complete. But you can always get an extension on the 20-day. So breaking the 20-day along with the RMI is going to be a much more certain signal that yes, maybe we have a top in the dollar. Okay, and lastly, it's going to be bond yields. They did fall a lot yesterday after some Fed comments by one of the members. Let's see if there's follow-up. The RMIs are in sell mode, but this has been the trickiest part. So again, I'll look for follow-up. There is of course a divergence between the 2-year, 10-year, where the 10-year yield is rising more than the 2-year. So there is some kind of an intermarket divergence, but we actually want to see follow-up declines in the US bond market to really confirm that this is a reversal, because we've seen many false reversals recently that have not followed up and then seen one more new high. So that's all from me for this update today. Thank you.